I'm seeing some familiar names.
Yes,
Well,
sir. Yes, sir. Okay, guys, we're gonna give this. Let me do this. My bad. Okay, guys, we're gonna give this about 60 more seconds. And I think it's the second time I say that, but people hop on late. So let me say 60 seconds to 2 minutes, and then we'll get everything started and rocking and roll. Just waiting for everybody to hop on so that because it's gonna be a quick session. It's not gonna be too long. It's not gonna be too boring. We're gonna get in and out, get through the currency pairs, how it is we saw the market within the last 7 days, and how it is we go about our analysis. Then after that, we're gonna be all good. So literally about 60 minutes. 2 minutes, then we can do the most. Thank you guys for hopping onto the call. Thank you for your patience. So we're about to do the most.
it's given the benefit of doubts. We will be
Let's go.
on time as well. So, what can you say? Trade house, guys. Let's get on to the call. Let's get on to the call.
You know, bro. You know. Bonjo, let's run it, brother. I think we can just break it down, bro. Wait, hold up.
Okay, cool.
Get
So
my
what have you
camera
been
sorted.
looking at this week, fam?
We good. All right,
I haven't
bet.
seen your charts in a minute.
I know, right? Now it's wild. Okay, guys, thank you again for hopping onto the call. Thank you for your patience. Thank you for taking time out of your day to actually check this out. So today's going to be a very quick call. It's going to be an easy call because right after this one, we have to hop onto another call with the actual organization and the team and break down the charts wholeheartedly. So this is just to give a little bit of value for everybody within the group chat and everybody who we've been helping make some profits along the past month, I believe, a few weeks, I believe. So this is literally just to go inside the market and see how it is we see it and check out some of the value that's been provided for us that we've been able to utilize onto the markets. So first thing I'm gonna do is I'm gonna share my screen. Please let me know if you can see it the second it comes up. So I'm gonna let you know when, all right. Just let me know when you can see it. Oh wait, let me do, okay. Bonjo, let me know if you guys can see my screen, yeah? Yo, let me do this.
Yep.
So guys, please give me like a thumbs up in the chat or a reaction or anything where you just let me know that you can see my screen and then we can kick it off. Okay, hopefully my mic is better. Just give me a heads up or something in the chat, bro, so I know that, I'm talking to people. So guys, anything, you can unmute yourselves and just say, yes, you can see my screen or anything really, just so I know that.
Yes, sir, we can see your screen.
Great stuff. Beautiful. All right, awesome. So the first pair that I'm going to go into, I think I have about 4 or 5, I'm not too sure. But the first one I'm going to get into is GBP USD, guys. So very simple stuff. The manner in which that, myself personally, I analyze the market is very similar to how the team and I analyze the market. We have our different perspectives here and there, utilize a few different strategies, but at the end of the day, it's all price action and it's all institutional based. So GBP USD. So the first thing I'm going to get into now, guys. This is not a trade. This is not an educational call like a teaching Forex. I'm not going to be going into what's a trend line, what's a pip, what's all this stuff. Like I'm literally just going to go into how it is we see the markets, what it is we utilize. There'll be value. There'll be things that I explain because I think that I also had to learn along the way. But other than that, this isn't really extremely basic. So the first things first, awesome. This is what I'm going to get into. The first pair is GBP USD, right? And personally for me, I love my GBP pairs because they give out the most returns from a pip standpoint. So this is how I went about everything, right? First things first is I'm going to get rid of all of this stuff, just so I can tell you what it is that I saw when I looked in this. So guys, this candle over here is what's known as a buy to sell candle, because what follows right after this candle is a major move in the opposite direction, meaning this candle was just a fake out. It was literally just to push price a little bit higher before they pushed it all the way down. So what this is known as is a buy to sell candle. So there's a lot of volume trapped within a buy to sell candle, so 50% of it. So I measure 50% of the move, which I'm using my fibs and everything, and then that is my main priority. So if I do this, I fib this move from the top of the body to the bottom of the body. That's 100%, and that's the 0, that's the 100%. I look at 50% of it because that's where the most volume is trapped, right? Cool. Now, I also look at that by fibbing the whole move as a whole, just fibbing the whole move. And I look for the 78% retracement because it's a deep retracement. So my entry was right here at the 50%, the 50% of, the buy to sell candle from a Fibonacci standpoint, and 61.8 retracement. It's all aligning and it's all one thing. Because to me, that's where the money is. The minute I see things aligning, I'm like, okay, bet. My entry right here having a 26 pip stop loss and an ultimate swing target of 135 pips, right? So this is how I went about the trade. My 61.8, my 50%, and then I have a 20. I put the stop loss right above the previous high of the buy to sell candle. So price came, literally wicked the entry, went into a little bit of a drawdown. This was about, let me see this. This is about 20 pip drawdown. Yeah, had a 20 pip drawdown with one wick, and then continue going in the downwards direction. Now, my TP1 is at the previous low. So the previous low of where the move actually started before it came back to actually continue the movement. So this right here, this yellow line represents my TP1. So my TP1 from the entry, that was about, let me see. This was 80 pips. Yeah, my TP1 is about 80 pips. And here's the rule that we utilize within our team and organization, guys. The minute your TP1 gets hit, then you move everything to break even or just above your entries. Just below your entry, just so that, there's no money that's being risked or lost within the market, especially after you've made some money. So the rule number one is that immediately after TP1 is hit, your stop loss comes at break even right there. So that's what it's going to look like. But for now, I'm just going to keep it like that. So immediately TP1 gets hit, 80 pips, awesome. Price comes back down a little bit, misses our TP1 and comes back to reverse all the way. So it stops out at break even. So literally the only thing that happened is our TP1 was hit. So we're like, all right, cool. Money was still made. It didn't ultimately go where we wanted it, but look, it's how it goes in the market. And guys, look, I know some of these things are going to be some new concepts, but the more we go through a few other currency pairs, you're going to see exactly what it is I'm talking about. So, all right. In fact, gold broke my heart. So in fact, I didn't lose off it, just didn't do what I wanted it to do. Let me just quickly break it down. And Bonjo, I know gold is your thing. Bonjo, I know gold is your thing. So you know what? It's all good, bro. These are things that I'm gonna leave to you from now on. But check this out. Okay, guys. So basically, this is how I saw the market, right? So this move, I started it from all the way up here. This was before. Let me actually give you some perspective. This was before all of this happened. Yeah. Before all of this happened. All of this stuff, let's say that hadn't happened yet. Just to give perspective. Cool. So this is how I saw the markets, guys. Let me get rid of that. It's ugly. So I saw this ascending trend line and everything, right? 2 touches of a trend line, make sure it's valid and everything. Personally, trend lines to me are just an indication more than an actual thing to use. But the minute there were equal lows here that were done. So guys, whenever there's equal lows, meaning the market comes back to either dip or rise in the exact same place and then continues, it means right above there, there's a lot of liquidity. Liquidity means nothing but money, meaning where people's stop losses are, people's pending orders, like your buy stops, your buy limits, all of that good stuff. So that's where everything is held. So where I've indicated these dollar signs over here is where we've had equal highs. So this is what I was focused on, these equal lows over here. And what price likes to do is that price from an institutional standpoint, institutional being the people with the real money in the game, your banks, your government, your hedge funds who come in with hundreds of thousands of lot sizes, not even dollars, but hundreds and thousands of lot sizes. So they come through, they want to sweep the liquidity and take all that cash and then run and then continue in that direction, right? So the first thing I'd seen was these equal lows, and I'd wanted price to come back, retest in this region over here. So you see this sell to buy candle. This was literally a sell to buy candle, meaning price is just pushed down just so it can be pushed up again. I'll explain at some point why institutional market makers do that, but it's literally just so that they can make more money on their end. But I'll explain it in a bit. So what I wanted to see price do was, break out of this trend line, retest it, and then come down to this yellow line over here, this place that I've highlighted. Over here, I would have had 88 pip stop loss with a 762 pip. Now, Bonjo, the reason I say this is your pair, bro, is that, honestly, you never catch me there with an 88 pip stop loss. But for things like gold, bro, this thing needs to breathe. So what I originally wanted to happen was price to come back down, take out this liquidity over here, come back at the 61.8 retracement over here, at a premium price position, and then continue going up. So when that didn't happen, price literally, all it did was it left this liquidity down here Yeah, it left this liquidity down here and then came to sweep up this liquidity up here. So these equal highs over here. So you see the top of these wicks over here, literally all in the same area. It just means there's a lot of cash trapped up here. So price didn't come and balance this out. It just came, it shocked, but it's gold. So gold does what it wants. So that was that. Like gold, I'm leaving over it. I'm gonna hook up a new analysis for next week. If I don't get it, then we move on. It's life. Let me see. The other one that broke my heart. Yeah, no, guys, this one wasn't even good to me. This one.
And just another tip for people that trade gold is that when you look at gold, you should always look at the DXY. And what you'll notice is when gold goes up, the DXY goes down in some cases. So if you want to hedge yourself in some sort of way, that's another tip I can give.
Oh, 100%, fam. 100%. 100%. In fact, the fact that you spoke about the DXY, I want to show you something. One thing that I love the DXY for, right? So in fact, one thing that people don't necessarily notice, but EUR USD and the DXY move in the exact same way, but upside down. They move inversely. So let me make an example.
Exactly. Yeah.
So here with,
true.
let's say, EUR USD, right? So this is what I wanted to see play out. This is how I'd want to see the market play out. This buy to sell candle over here, price came down. I'd wanted to see price just come over here to balance at 50% of it, 50% of, the liquidity within this buy to sell candle, then continue going down. That's what I wanted to happen. I had about a 20 pip stop loss and a 63 pip take profit one, right? So the minute you understand risk management, then you understand that a loss can, like one take profit can make up all the money for, 3-4 stop losses hit, like honestly. So the minute you understand that, you're going to be golden. So here, price came, it didn't even ask to do what I wanted it to do. Price did its own thing, came through and stopped me out. And especially because, let me show you what I'd want to see on the DXY. Like I said, EUR USD and the DXY move exactly the same, literally just upside down. So I'd wanted to see the DXY, like there was liquidity up here, right? See these equal highs over here, and I put this dollar sign up here. There was liquidity trapped there. So I knew price was gonna come through, snatch up that liquidity, then come back. I'd wanted to see, like, if you guys can see these arrows that I actually had prior. That's what they look like. Yeah, I'd wanted to see price come back down, rebalance in this area over here. Like I said, now this was a sell to buy candle, right? So there's a lot of liquidity trapped within the beginning and the middle of the actual sell to buy candles. Most of the volume is within the middle, the 50%. But I just gave it a range to, to make sure everything happens the way I wanted to, give it some, an opportunity to breathe. But price came back to that exact same region, went up a little bit, but I think news came out, dropped through the roof, came back down, and I was like, okay, cool. That's just one of those ones that, it's not going down like that. And remember, guys, the DXY does nothing but give you a directional bias for EUR USD.
Pairs.
Exactly, on USD pairs primarily, right? So that was that. Let me see. EU, this is USD CAD. Okay, I know. Here I had a field day. Like myself and the team had a field day here. So I'm going to try and break this up as best I can. Okay.
Also, it was pretty good.
Hey, brother, this was
USD CAD was pretty good last week.
Appreciate it.
That reversal that happened at the end of basically the beginning of this week.
Exactly. So guys, check this out. The first entry that I want to show you, I want to literally explain to you how I got that entry, right? So I came to the 4-hour. So again, here you see that buy to sell candle. So guys, listen, because I can see that I'm gonna be using this a lot. A quick explanation of what a buy to sell candle is or how it is that it forms. So normally, guys, the market movers, the people with the big money in the market, your banks, your governments, hedge funds, all of those people, right? They are the ones who move the markets primarily. Us, we're not a fart in the wind in terms of the market, like what it is that we do in it. So a buy to sell candle is when they hedge their own position. So they place orders here at the 50. Right at the opening here, they place as many orders as they can to push the market up. And then they hedge that position and sell. So they buy over here and they sell over here. So once the market goes all the way down, their buy positions over here are in negative, as in they're in losses over here. But their sell position that they took on top of this candle are in hundreds of millions of profit. So eventually what these people do is that they have to mitigate out of that trade, meaning they have to break even out of the trades that they are in losses. So then they come back, they push the market back to the original entry point, which is the 50% of this buy to sell candle here, which is where the majority of the orders were placed. So they literally just come back over there so that they can break even. Because when price comes all the way down here, on their sales, where they've made hundreds of millions of dollars, they take profit, they start closing it off a little bit so that the market can come back and recover. And when it comes back to that original entry, they break even at zero and they take the money that they've made off of the sell. This is still complicated stuff. Well, it was like for me when I started, but when it so literally this is my first entry. So this is literally my first entry, right? This was the first thing that I saw. I was like, okay, price has to come back and rebalance this move over here. So now we can go to the 1 hour. I just wanted to give you perspective of what that looked like. So cool. All right, so this buy to sell candle over this yellow line, that was what was represented with it. So that was my entry level over here. Price literally came, kissed the entry. I had a 25 pip stop loss and an 81 pip take profit run, right? Also, one of the things that influenced this trade the most is these equal highs over here. So remember, guys, the minute there's equal highs within the market, it just means that right above those equal highs, there's a lot of volume. There's a lot of volume trap. Volume just means nothing but money, a lot of orders. Be it your stop losses, your buy stops, all of these things. So the market makers literally just want to go, come up, trigger all of these transactions, and then let price continue going down. So this is what I had hoped to happen in the markets. The first move played out perfectly, right? So price came, literally kissed the entry, and then came all the way down, hit my TP1. In fact, let me not say TP1. I only had one TP for this move because this was a sell to buy move. I was just selling because the ultimate move was a buy, because I knew that the minute these are taken out, it means, okay, price is now probably trying to go up. So the first move, 25 pip stop loss, 81 pip take profit, literally happened. Great. That triggered my second move. The second entry I had was a 20 pip stop loss with an ultimate target of 164 pips. Now, this is exactly how it was planned out, guys. I drew my fib from the bottom over here. Like you see this fib over here. Let me do this so you guys can see it. This fib right here, I drew it starting from the bottom to the top of this move. I'm always looking for the 61.8 entry because 61.8 entry is my golden pocket. If it's not 61.8, I'd prefer it. But if it's a deep retracement, then we go 78. But that's another thing. So I was looking at the 61.8 entry. Price literally comes, kisses it, 20 pip stop loss. It doesn't come close to it, and then goes up to my TP1. So my TP1 over here is, let me see. We hit a TP1 of about 72 pips. Yeah, 72 pips. So TP1 was about 72 pips, right? Cool. And like I said, like the previous thing, the minute TP1 gets hit, then your second or third entry, depending on how many times you go into the market, everything gets moved up to break even or slightly above, so that there's no money left on the table for you to deposit to a broker. So the minute your TP1 is hit, everything is moved to break even. But price came, retested the actual entry, played around a little bit, went down, came up, and eventually stopped us out. So it was what it was. But we got stopped out immediately as it came back to the entry level. So TP1 was hit with about 72 pips. We were good. It's whatever. And then price came down, 20 pip stop loss, but luckily nothing was left on the table. So this was USD cash. So these were these two entries. The first one was about 81 pips. The second one was 72 pips on this one pair. So yeah, this one, the team had a field day with this one pair. Okay, let's see. AUD, USD, AUD, NZD. Oh yeah, this is actually a trade that the team is still in right now. That myself and the team are still in at the moment.
Fire.
Simple trade, bro. Like, guys, simplicity sells, guys. I'm not gonna cap. Simplicity sells.
Channels.
Simplicity sells. All right, let me see. Okay, so obviously, the upward trending channel and everything. Guys, I'm not gonna lie, the channels help a lot because they give you a directional bias. But in terms of how it is the market moves, as long as you use an institutional mindset, you're gonna be A1. So let me tell you the first thing that I saw, like the upward trending channel and everything. For me, all that means is previous, like here, this was once a previous higher high. At some point in the market, this was the highest point it's ever been to. Then price comes to retreat down, to retrace down, and then goes up and creates a new higher high. This was the previous lower low, and then it created a new lower point. So the minute there's a new higher point and a new lower low, it just means price is continuously breaking its previous ceilings and going up into an upwards direction. So cool. So for me, I know that we're in an upward trending market, right? Sweetness. I draw my fib from the bottom, from the previous current high, from the previous lower low to the current high. And I was looking, okay guys, I'm gonna keep checking the chat box to make sure that I'm not losing anyone. What time frames do we use? Okay, let me answer. Time frames. Yo, honestly, I'm not gonna cap. We look from the daily and then we break it down to the 1 hour, because daily gives you, bigger perspective, but we trade and execute on the 1 hour. Some people in the team, 15 minutes and 30 minutes to do the perfect entry, some even 5 minutes. And, I participate in that too, but mainly in terms of looking for entries, we look at, I do the 1 hour. I look at the 4 hour for structure and the 1 hour for entries. So this is me. I drew the fib from the bottom over here to the top over here. I looked for that 61.8 retracement. That was my entry. Price literally came, kissed the 61.8 entry, and continued going up. So my TP1 was smashed, meaning, you know, all trades, everything, stop loss got moved to break even or slightly above. So let's see. Oh, my bad. TP1 was about 80 pips. Yeah, TP1 was 80 pips. TP2 was a total of 153 pips. So hopefully TP2 is still, you know, hopefully going to get hit, but we're waiting for it. But TP1 has already been smashed, meaning we've taken money off the table. We are A1. So the things that contributed into this trade was obviously higher highs being taken out and lower lows being created, meaning an upward trend. Awesome. Now, this is one of my favorite things to see in the market, guys. This right here. If I'm to draw a yellow line, you see from this point over here to that point over there. So you can see this yellow line is in an upward trend, right? If I was to pull up the RSI and draw a yellow line on the exact same point, on the RSI, it's going down. So what this is called, these are called divergence. When the RSI and the actual chart move in opposite directions, it means a major move is about to happen in the opposite direction, right? It means like on the opposite direction of the RSI, but in the direction of the actual chart. So those are the three things that I saw. One being previous higher highs being taken out and lower lows being created. That was the first one. The second one being a 61.8 retracement from the fib, like from the previous low, current high, 61.8 retracement taking place. That was my second confirmation. And then the third one being divergence on the RSI and the actual chart. So that's how the trade came to be, the upward channel. We're still waiting for TP2 to be taken out, but so far so good. So hopefully this one made sense. This was extremely simple. For me, guys, simplicity sells. So that was, let me see, AUD, NZD. By the way, guys, if you have any questions as it is, I'm explaining and we're going through everything. Oh, snap. The chat box keeps lighting up and I don't see it. Just keep putting anything in the chat box and I'll try and cover it as it is that we go. Because like I said, I'm really not going through, you know, all, you know, like in-depth analysis, like exactly the nitty-gritties, but, you know, just the mindset and the manner in which that we approach the markets when we see it. Okay, so this was, what we're looking at now is what? What's this? EUR GBP. Yeah, so guys, look, the markets have been wild. In fact, disclaimer, straight up disclaimer. Guys, I think within the past 3 months, let me see. Please share the video after you're done. I can't keep track. I'm taking notes. Okay, my bad. Okay, I will do so. This is recorded, so I believe Bonjo myself will send you the video, no sweat. And I'm sorry if I'm going fast, guys. I really do apologize. So this is EUR GBP. Oh yeah, I was making a confession. I was making a full-fledged disclaimer. Guys, myself and the majority of our team are swing traders. You know what I mean? Everyone within our organization and within the IM Academy are swing traders, right? But within the last, you know, month or two, swing trades have not been that well. I'm not gonna lie. So we're now intraday traders, from swing traders to intraday, meaning TP1s are always being smashed, but TP2s are now like they're more difficult to come by. So let me break this down and just show you all what I mean. All right, so this is very simple, guys. This was like basically the opposite of the last one, meaning lower lows are being taken out, and lower highs are now being created. Meaning the highest point was once this point, then this point, now this point, and the previous low was here, then it was here, then it was here. Meaning the market is slowly making its way downwards, right? So all I did was I fibbed the move from the top to the bottom. And I was looking for like I said, I'm always looking for the 61.8 retracement, right? So I was looking for an entry on the 61.8, as well as this uneven trading that took place over here. Now, guys, what uneven trading is when the market has been given into one direction wholeheartedly, like there's no buying and selling. It's just been taken into one direction, candle after candle after candle. So what happens when that happens? What happens when, you know, the market structure looks like that is price has to come back and rebalance itself. Because for everyone who's selling, there's someone who has to be buying. For us to make money in the markets, there's someone who has to look in the market and say, nah, I think it's going the other way. And somebody got to win and somebody not so much. So that's the basic principles of, you know, how the trading actually works. So whenever you see price being given into one direction like this, price has to come back and mitigate out of it and has to, you know, balance itself out. So I was looking at the 61.8 for that. So price came, 61.8, that was my entry. My TP1 was at this previous high, and then the TP2 was obviously at the previous low. So the first stop loss was 12 pips. Yeah, now this was a very easy, this is one of those intraday trades. So the stop loss was 12 pips and TP1 was about, let me see. TP1 was about 18 pips. Yeah, 20 pips. Yeah, about 20 pips. TP1 was 20 pips. TP2 was about 49 pips, almost 50 pips. So price literally came, took out and triggered our entry, hit our TP1. And like I said, when TP1 gets hit, all the your stop losses come to break even. You take all your money off the table. We're not donating to brokers here, guys. We're not in that business. So price comes, takes out TP1.
We need to kill the brokers, guys.
Bro, listen, we're not here to donate. So price comes, hits TP1, reverses, comes back to our entry, and stops us out at entry. So it's like, okay, cool, that happened. A little bit of money was made, but whatever happens, happens, guys. It is what it is. So last but not, yo, guys, US 30. You see, bro, this is why I leave indices to you. Let me do this, my bad. Guys, this is why I leave indices to you guys. When it comes to currency pairs, I'll do the most, but indices, nah, bro, these things are not my favorite.
I don't know if you want to host me for it, but I can go through my analysis.
Okay, yeah, I'm gonna give you that real quick, no problem. Let me just show you guys what I have.
Just do Nasdaq and the S&P500, and then we can call it wraps and go deal with.
All right, easy. Let me break down US 30, what I had real quick. So where we at? So the first thing that I had, I believe this is on the 1 hour, the 4 hour chart. 50% of the move. In fact, let me see. Was it on the 4 hour? Just so I can give you perspective. Yeah, there it is. So first things first. So US 30, guys, it's an indice, not necessarily a currency pair. Hopefully, most of us know what that is. So what I was hoping for literally was, so I measured this one. This was a buy to sell candle, right? So price got pushed up just to get pushed down and then continue going down. So 50% is where the majority of the volume was trapped, and that's what I was banking on, you know what I mean? That's what I was banking on to see in terms of taking it out in the markets. So I just want to show how that entry came about. So let me go back to the 1 hour where it makes a little more sense. So this is about here. Let me make it a little bit more accurate. So price comes down. Literally 50% is the only thing I was looking for, right? 50% is the only thing I was looking for. These are about here. This is about here. All right, cool. So price comes, literally kisses the 50% just into, oh yeah, and guys, this is indices. So I had about 116 pip stop loss for this. And then my TP1, let me see what TP1 was. TP1 was about 176 pips. TP2 was about 341 pips. Yeah. So price comes, literally enters the 50%, hits TP1, comes back to trace a little bit. Oh, guys, remember, like we said, when TP1 is hit, everything comes to break even. So I'm not sure, depending on different people's brokers. Some people got stopped out when price came here because of spread and everything, but it didn't come back to hit the entry exact. But some people got stopped out, and yeah, on one account I got stopped out, the other account I didn't, just because I'm using different brokers. So TP1 was smashed, comes back to trace a little bit, comes all the way down, hits TP2, we're good, then comes back and reverses. Yeah, then it goes all the way wild. But this is literally just a buy to sell because the major move was here. This is what I was excited about. I wanted to see the major move trace to the 61.8 over here. Because like we said, guys, like I fibbed this whole move. So this whole move from the bottom over here to the top, I have the 100, I have the 0, and I was looking for the 61.8. That was my entry. So for my entry, for the sell, my entry was up here, my TP1, my TP2. For the buy, my entry was over here, my TP1, my TP2. Yo, guys, I need to keep visiting the chat here just to make sure that everybody's with me. Okay, cool. So let me break this down. So literally, I just want the price to come through to this area right here to the 61.8. My first entry, it came, hit the 61.8. Oh yeah, guys, look, I had a stop loss of 138 pips and an ultimate take profit too of 455 pips. Let me see what TP1 looked like. TP1 was about 250 pips. Yeah, TP1 was about 250 pips. So price came through, went inside the 61.8, retraced just a little bit, had a little bit of drawdown, but shot up, took out TP1, took out TP2, and we're like, all right, cool. Price came back to retest the same area. And guys, look, if you understand your risk management, as in you know what to do, how much to risk to make this amount of money, then you are golden. You can do what you want in the market as long as you understand that principle. So price comes back. I use the exact same entry, same stop loss, same risk and everything. Price comes and enters the 61.8 again, has almost the exact same drawdown, then goes back to hit my TP1. I still had the same TP1 and the same TP2. This time it flew all the way up, making me wish I stayed in a little longer, but you know, it is what it is. We take our money, we run, we Gucci. So this is my methodology and how it is I came, how I attacked US30. So personally, I don't trade indices all that often because sometimes they don't follow structure. They just do whatever the hell they want. But when they actually follow structure that it is, I understand, then I'll always go into it and try and see what we can do. So this is my TP1, my TP2 was taken out. And yeah, guys, that was my methodology towards this trade. This was US30. So I believe this was all of mine. So just to make sure, let me see if there's anything in the chat. If you guys have any, if it was just clear, you know what I mean? If the currency pairs, the manner in which I approach the market, the entries, the stop losses, and all of that, if all of that stuff made sense, hopefully we all good in that regard. So Bonja, I'm gonna make you host for a little bit so you can do the most, yeah? Let me just see if the chat is cool. Yeah, no, we all right. So Bonja, we good? Can I make you host and then you can do the most?
We good. We can make me host.
All right, brother, no sweat. I'm about to do the most.
I'll just kill just 2 and then we can call it.
No sweat, no sweat. All right, where are you? All right, brother, the mic is yours. Do the most. But if everyone's clear, then all right, awesome. All right, brother, you host, share your screen, do what's got to be done.
Okay, let me know if you guys can see what is happening.
We can see it, brother, loud and clear.
As you guys can see, we've literally been in this range.
Bro, your mic is just a little low, bro. Your mic is, I'm not sure if it's just on my end, but your volume is a little low. So just see if you can increase anything. But
okay, can you hear me better now?
Oh yeah, I got you. My bad. My volume was down. We got you.
So you guys can see we've been in this range for the last since the 13th of July. This for about a month has been literally in this consolidation range right here. You can zoom out. We've been creating the same highs.
Bro, okay, it says it's better. They say it's better.
Good. So what we were looking for last week, we had this, or the week before, we had this massive move to the downside. And one thing you should know with tech stocks is that they always push the upside eventually.
Bro, just try to increase your volume a little bit, brother. You're not as clear right now. Even people in the chat are saying just raise it up a little bit. So see if you can just increase your volume just a little bit there.
Like, cool.
All right, just do the most. This stuff was clean, bro. This was nice. Okay, bro, I don't know if it's just me, but I don't think they sound. Let me just ask, like, because I can't hear you anymore. Let me just see.
Okay, cool.
Okay,
I hope it's better now.
We got you.
Cool. Just had to connect with my phone quick. But anyways, nevertheless, what I was saying, we were looking for this move because we had this double top up here, right? And, you know, when I looked at my RSI, it was really oversold. We had this really good move. We had TP1 down here, had a small retracement. We didn't have this trend line in place then, and then we had this massive move to the downside. So when price got down to this level, and if you look at this level, this trend line here that I have in place here, if you go to the 4-hour chart, you can see that this trend line I have has been holding this thing. And we had that touch there, and then we had this breakout right here. So for me, this line was valid, and then we had the retest. So once we had the retest like that, I told the team, guys, okay, let's put some buy limits around this area, get into the trade. We got into the trade to the upside, to profit there. and then we're looking for another entry to the upside. So we got into this trade right here. We saw this bounce, and we literally got stomped out. We literally broke even on the trade to the downside. So right now, the upside, we didn't really trade the upside because price was just really choppy. You know, we had these engulfing candles. You know, it's like, okay, let's sit it out and wait for this channel. So I literally drew this channel in as time went by. And if we go to the hourly time frame, you can see we had these double touches here at resistance. So I was like, okay, this is probably a good time to get into the market because I had this high here, and then I had this higher low here. So I was like, okay, let's get into a sell position. I literally took the trade to the downside, and the trade went down for a bit and then literally turned around, and our stops got hit literally just a few pips away. And ever since, we are literally been moving in an uptrend. And I noticed when I checked with the S&P and the Dow Jones is that we've literally been moving to the upside ever since. So right now, with the Nasdaq and S&P 500, we're looking for retracements to the upside because, to be honest, guys, if the Nasdaq has to push higher from where it is right now, if we look at it, we can just use the fib levels there. I know Tabo loves the fibs.
You know the vibes. You know the vibes.
High to low. Okay, high to low. So potentially the next targets we have to the upside, like real targets, I would say is 11,500. I'm not sure if we'll get there. So first target for me is about 11,400, and look for retracements and more buying opportunities, buying setups to the upside. So that's kind of what we have going on right now with the Nasdaq. If I can give you guys a quick look of the Dow Jones, and this is where I saw that stocks are pushing higher in general. If you see the Dow Jones, the S&P 500 doing the same thing, just know that Nasdaq is going to follow without a doubt. So you guys can see we have this trend line here in place. We had this high. Dated, and we finally broken above this high. And we have this, it was resistance, has now turned into support. So if we look into the candlesticks, what we're looking for now is an entry to the upside. Okay. What we're looking for now is an entry to the upside. If we can get any sort of retrace back to this, let me pull out any small pullbacks whatsoever. Not doing any sort of pullback
Banjo,
to the
bro.
downside.
Brother.
Can you hear me?
Yeah, I can hear you. I'm saying my phone is blowing up, man. We got that next call that we have to be on. We're like a few minutes late, so my phone's blowing up. So let's wrap it up.
Cool. So that's literally all I was looking at. Guys, we're really sorry for this, but we're gonna definitely chop up another one next week and the end of the week. So thank you guys for those that hopped on. We got to deal with our team right now, and just make sure everyone gets sorted before tomorrow.
Oh wait, bro. Yo, can you make me host again? 2 seconds, just so I can end everything.
Okay.
But yo, guys, look, on behalf of myself and Bonjo and the whole team and organization, guys, thank you so much for hopping on the call. And we apologize for, the speed at which we had to go through, but it was recorded, and anyone who wants to check it out or, hit us up after this, please feel free to do so. We are more than willing to, do the most. But otherwise, thank you guys for taking time out of your night to check it out. We really hope that a little bit of value was provided and a little bit of insight of how it is we tackle the markets and see the markets actually takes place. So thank you guys again. Please hit us up as soon as this call, ends, and let us know what it is you thought of everything and, how it is you want to move forward. But Banjo, brother, you can do the most and end the call, bro.
Okay. Thanks, guys.
Bye.
Awesome stuff, man. Awesome stuff. All right.